Good morning everybody, and this is your Dow Jones day trade setup for today. So pretty much a sideways week last week, and you can see that's the bottom end of the range and that is the top end of the range. So we had earnings come out, wasn't too bad, but then we also had a lot of inflation fears and coronavirus fears again as well. So if we start drilling down through the time frames, you can see most of last week was big down, big up, sideways, big down. So we do have a bit of divergence here. We've got a double bottom, or in actual fact it's slightly lower than that side, whereas the oscillators are low and higher low. I suspect we're bottom of range at the moment, and we're going to have to wait for more earnings to come out and to see where the market is going to go. But if you look at the hour, you look at the oscillators, we've got a bit of a crossover brewing here. I would expect this gap to close at least. So there is a gap there, but there is structure higher up. Basically what I would expect is a move up to this area, but that would also validate a cup and handle or inverse head and shoulders as a break above this high here. Let me put that level in so you can see what I'm talking about. Right, so this is the structure that validates cup and handle, head and shoulders, double bottom, whatever you want to call it, and that's at 35,992. So a little bit of overhead resistance above there as well at 36,059. So I'd want to see us break through the structure, come back and form base inside here before looking for opportunities to the upside. If we reject this area, then I would expect we're looking for another move to the downside, and probably to come and test this 35,650 area. For me, this is the same as the DAX. There's not much in earnings coming out today, so this is kind of a wait and see still for me until we see some structure that makes sense. At the moment, the only thing that makes sense is we are below the moving averages, and you can see the rejection we had on Friday, quite a long rejection. What's that, 2, 4, 6 hours that we were trying to get through the moving averages and the structure to the left before rejecting it and falling. So I'd be watching out for that. If this pattern repeats itself here, in other words, pull back and then sort of form a micro range up here, I'd be waiting for a break of that for a move to the downside with a stop above that structure. So that's kind of the view that I've got. Last thing is just from a hindsight being a perfect science. So there was the 1 hour range. If you come down to the 15 minute, you'll see it quite clearly. So if you look at the moving averages all crossed over. We're flirting with the 155. So basically what you're looking for is a break of the structure to the downside, and that's exactly what happened. You got it basically with this bar here. So that should have given you an entry to the short side with a stop above here, and it was reasonable risk. So it's 120 odd point risk, and you had potentially 430 point gain. So, and that's all in a day. But anyway, that's if you're watching this on the 15-minute chart. So pay attention on the 50 minutes, and that's basically what I'm getting to. Is if you see the structure, even if you see bearish structure like that, it's well worth taking the scalp, so long as you've got a tight stop. And what I normally do, because you're going against a bigger trend, is I take a much smaller position. But typically when you're trading sort of the short side, the moves are rapid. So you can trade with a much smaller position and still make your profit targets quite easily. Anyway, that's kind of my view at the moment. Looking for structure. We reject anything in this area, in this 36,059 to 35,992, so basically 3,600. If we reject there on the 15 minutes, you get some kind of pattern like that, sort of rejecting the moving averages, then take the break of the pattern, and you might as well look for something to the short side. Although I think it's going to be short-lived, excuse the pun, but 35,652 is going to more than likely hold up. If that gives way, that opens up the door for a much bigger move to the downside, which would be this range. So it would basically be something in the lines of 800 points to the downside. And just before we close off, what you want to be doing is add your structure in, add your different levels in, so you know exactly where to sell off and or buy. So that's the two options that you've got, obviously. But you can see where price gets to here, forms a base, it'll bounce up, come down here, form a base, bounce up. So what we're looking for is some structure, and there isn't much at the moment. So that's kind of my view today, is really just sit on hands. So it looks like most indexes is a sit on hands day. Hope it helps, and we'll catch up with you tomorrow. Cheers for now.